A. Define the nature of the system, understand cost flows, and identify appropriate use. Job order costing accumulates costs by specific job or batch. Direct materials and direct labor are traced to individual jobs, while overhead is applied using a predetermined rate. Cost flows move from raw materials to work in process, WIP, then to finished goods and cost of goods sold. Activity-based costing, ABC, assigns overhead based on activities and cost drivers. Costs are accumulated in activity pools and allocated to products using cause and effect relationships. Appropriate use differs by environment. Job order costing suits customized production, while ABC is valuable in complex settings with diverse products and significant indirect costs. E. Identify benefits and limitations of each system. Job order costing is straightforward and well suited for customized production. It provides detailed job-level cost information but may distort overhead allocation when indirect costs are significant. ABC improves allocation accuracy and highlights cost drivers. It enhances decision-making in complex environments but requires significant data collection, analysis, and implementation effort. Selection depends on organizational complexity and objectives. Simpler systems may suffice in homogeneous environments, while ABC is more appropriate for diverse operations with high indirect costs. B. Calculate inventory values and cost of goods sold. Under job order costing, inventory balances reflect accumulated job costs. WIP includes partially completed jobs, finished goods contain completed job costs, and cost of goods sold reflects costs of delivered jobs. NABC, overhead allocation improves accuracy of inventory valuation. Costs assigned through activity drivers produce more precise product costing compared to volume-based allocation. Accurate calculations depend on proper overhead application. Over or underapplied overhead must be adjusted to ensure correct inventory and profit reporting. D. Discuss the strategic value of cost information. Accurate cost information supports pricing and profitability decisions. ABC provides more refined overhead allocation, helping managers identify high-cost products or customers and adjust pricing strategies accordingly. Cost data informs process improvement and cost control. Identifying cost drivers allows management to streamline activities, reduce waste, and improve operational efficiency. Strategic decisions rely on relevant costing. Understanding true product or service costs enhances resource allocation, competitive positioning, outsourcing decisions, and long-term planning. C. Understand accounting for normal and abnormal spoilage. Normal spoilage is expected and unavoidable. Its cost is typically included in product cost and absorbed by good units produced, reflecting standard production conditions. Abnormal spoilage is unexpected and avoidable. It is treated as a period expense and reported separately, highlighting inefficiencies or quality control failures. Proper classification improves performance evaluation. Distinguishing between normal and abnormal spoilage ensures accurate costing, enhances operational accountability, and supports corrective action when necessary. F. Understand process costing and the concept of equivalent units, no calculations required. Process costing is used in continuous, homogeneous production environments. Costs are accumulated by department or process rather than by individual job, making it appropriate for industries such as chemicals, food processing, or mass manufacturing. Equivalent units convert partially completed units into fully completed units. This concept allows organizations to measure work done during a period by expressing incomplete production in terms of completed units. Equivalent unit analysis improves cost allocation accuracy. By separating materials and conversion costs and measuring stage of completion, managers ensure fair assignment of costs to work in process and finished goods inventories.